Good to be here. My name's John Pellew. I'm the CEO and founder of Othera. And today's session's about blockchain in lending. And by way of my background, I spent 10 years as a lender, both in Australia and in the UK. And now at Othera, we build loan lifecycle software using blockchain to bring transparency and liquidity to the lending process. We're an infrastructure-only business. We're not a lender. We just provide the software solution. But what we have achieved is we've got clients in 3 continents. We have our first client live here in Australia. I'm not sure where he is, Ivan from Credit Crowd. And we have a global patent pending on our blockchain technology. So enough about me and a little bit more about blockchain in lending. And really, for me, the conversation starts with the lending ecosystem, as Ruth also mentioned a bit earlier. But what it is for us, it's really about the problems and understanding, how to deliver real value to the stakeholders. So what we've mapped out as a good place to start is really what the non-bank lending ecosystem looks like. And really it's significantly broader than just the lender. And I think Ruth also identified this. It's actually a lot about the service providers that also have to connect into the system. But in our world, it goes even further. And we also see there's a massive role to play for the trading platforms that trade debt. And then significantly the buy side of the market, so the buyers of these lending assets. And as I hinted at before, delivering a successful loan lifecycle management system on blockchain or otherwise is really about solving each of the stakeholders' problems and delivering value. So what are the problems? Well, for the loan originator, and again it's been brought up a couple of times today already, it's about automation. But it's also about bringing buy-side scale or buy-side to help these lenders scale their balance sheets. For the trading platforms, it's really about access to innovative products and liquidity. The external stakeholders, for them, it's really about access to trustworthy data. And then finally, the buy-side, for these guys, it's really about building yield and managing risk. So now at Othera, we use blockchain really as an enabler to automate and rewrite the loan lifecycle process from lead capture right through to the sales of these loans. And so what does it really look like? So we'll just put together a quick slide of what a blockchain world might look like. It's kind of broken down into 4 core components: managed services, which is kind of microservices in the API economy. It's loan management, so everything from origination to the buy side. There's a blockchain layer in there, which is kind of the single source of truth for all data. And then it's all of the ancillary service providers that have to connect into that data layer to do their jobs. And that's everything from the regulators, auditors, rating agencies and titles. But I think one of the things that we get asked a lot in this business is really why blockchain? What is the use case for blockchain in this whole process? And I suppose the best answer is actually 4 points, and that is, first of all, it provides an immutable, provable, single source of truth for the lending process, creating what we like to call total asset provenance. It also provides a provable register of ownership of all the assets, and it provides a trusted way of sharing data between entities that have very little way of trusting each other. And then the last part, which is the really interesting bit for us, is the smart contract capability of blockchain. And that really provides a mechanism to automate processes and to create a whole new suite of financial products that the market hasn't actually seen yet. So with what we're trying to do is really lay down in this diagram here the core blockchain layer. And really what we're trying to do is get it to extend the full width of the lending process from the origination right through to the buyers and everything in between. So it's actually a much, much larger ecosystem than many have actually even thought about. And it's really about this, which is the secret for what we see in the future of blockchain. So what does it look like in an Othera world? This kind of gives you a very high level or rough architecture of what we've built. It has, again, 3 layers. It's the borrower, the workflow layer, and the core blockchain layer. But inside of that, there's actually 3 kind of core platforms. The first part of it is the lending platform, which is really designed around workflow automation. It takes the process from the acquisition of the inquiry right through underwriting, through to settlement and servicing. It also deals with what we do, which is the digitisation of the lending asset. So we actually tokenise the cash flow of the repayment of these loans into a new class of digital asset called a segmented risk-based security. This is something that we have our global patent pending on. And what it represents, in a little bit more detail, is the ability to take the risk tranching concept of securitization and take it down to an individual loan level. So you can actually pre-tranche risk inside an individual loan. And that gives you a lot of flexibility to both have fine-grained pricing of risk, and also to be able to trade these different types of cash flows independently. The second part of it is really about the trading environment. So we've built an exchange and a part of a platform which essentially looks a bit like automated securitization. And that has the potential to deliver digital assets to the buy side of the market in almost real time. And then lastly, we have a settlement engine which allows the settlement of trades, i.e. payment, and it also manages the register of ownership of the digital assets that are created inside the system. So using end-to-end workflow management and blockchain, we're allowing lenders to originate and sell their loans in a much more effective and efficient and time-efficient manner, and potentially securitize their assets without the need to have, multiple billion-dollar transactions to get economies of scale. For the buyers, there's a whole lot of benefit as well, and that is that the buyers have the ability to buy in real time, but also to have access to real-time payment performance of the underlying pool of assets that they're buying. So no longer do you have these opaque pools of loans that the buyers can't see. They can price effectively for what they're buying. So this slide is, I suppose, the summary slide. It kind of outlines what we see as the upsides or the value proposition for non-bank lending and using blockchain. But in summary, it's the blockchain layer of the ecosystem is an enabler technology, and it essentially is going to bring a huge amount of value to the non-bank lenders, as lenders are going to be able to connect direct to their buy side of the market. Essentially on a thing that looks like a blockchain debt superhighway. To the question that many ask, how fast is this going to happen? How fast is this technology going to be adopted by these industries? Well, I can put it in context of essentially what we're achieving, and then if you want to scale it up from there from a global perspective. We know that in 2018 alone, we're likely to go live on the blockchain with the following kind of clients. We have a 40 billion euro asset manager in London, an SME lender in the Netherlands, an investment bank in New York, a resi mortgage lender in the US that writes 7,000 mortgages a month, a public exchange in Australia, and a number of online and marketplace lenders around the world. So, and that's just 2018 for us at this point in time. So you can imagine what is going to happen on a global scale when this technology really starts to hit its straps. And I suppose the last statement is just to remember that no matter what you read in the news and what you hear from the big banks and the consultants, enterprise blockchain is actually here right now. You can almost buy it off the shelf, and it's already starting to change the way that the lending ecosystem works forever. So that's the future of blockchain in lending.
I think we've probably got time for just a couple of questions because it is quite an interesting area. So I'll kick off with one question. You mentioned all of those, and remember you can ask questions via our app. You mentioned that you have got clients coming. One of the obvious questions that all cynical journalists ask is, when is blockchain going to produce any revenues? I can see the products coming, but what's the revenue structure look like? And how much is it? I mean, what are the revenues going to be? Is it going to be just a sort of basic service utility as a software kind of thing? Or, I mean, walk me through what the revenue model looks like.
Well, for us, the revenues, well, for our company are immediate. There are two parts to our revenue stream. We build bespoke for clients, so we charge a fee to build a blockchain environment. But more importantly, it's really about transactional revenue. So we are creating new classes of digital assets, the likes that the markets haven't seen before. We're providing a significant value proposition in the truncation of timeframes in the way that lending works, but also the way that the securitization process works. We are able to, we believe, strip out probably 75% of the ongoing running cost of a securitization pool, an SPV. Our technology auto-reconciles the inbound waterfall of cash and the outbound waterfall of cash. It provides all of the accounting transactions and the regulatory compliance all in one hit. So no longer do you need teams of accountants to do these types of things. So there's some significant value proposition. But I think that more broadly, I think that the value of blockchain is in the new suite of financial products that these smart financial engineers are likely to be able to build using the SRBS token system that we have, but also the block bond, we call it. It's a trademark product. It's essentially like a digital CDO where you can drill into the construction pool of what's involved in the thing, in the securitization process. So once you start being able to strip down these assets, there's significant value to be created.
And we have one question here. It sounds like you have to buy them from loan originators. What level of interest is there from the buy side for SRBs?
Well, already we've got quite a significant pool of loan originators that we're just about to start building for. I think we have something like 6 or 7, which we will start this year. We have a pipeline of another 20 or so from various countries around the world. We're also doing a significant amount of work on the buy side of the market. We have the investment bank in New York is going to build an OTC debt market in our product. We're also already in discussions with buyers of these assets, both in Japan, in Europe and the US. And they're some of the biggest names in the marketplace. So some of the names you've already seen on the board already today.
Thank you very much, John.